have, but all of how these overnight cues going to impact our own markets. We have a power prep segment now. A research team joins in with the trade setup, the stocks that you need to watch out for, and some cues from the F&O space as well. I'll take you through what happened with the cues that you're watching out for this morning. But pull up the 3-month chart for the Nifty and you'd see the kind of week that we had last week. We've almost slipped below the 22,000 mark, but somehow we have huffed and puffed our way back above the mark of 22,000, at least on a weekly basis. So that is one positive sign. But the signs of worry come from the institutional investors. The foreign investors, yes, last week were heavy sellers, and almost close to $2 billion of selling that we saw from the FIIs last week. There you can see almost 21,000 crores there. But the DIIs tried to absorb most bits of the selling pressure that came in from the FIIs. The last week, the Nifty was down close to 2%, despite that bit of recovery that we saw on Friday. But the Nifty Bank was the bigger underperformer. That fell close to 3% last week. So the Nifty Bank has been the wobbly one among the two. And the other concerning factor is the VIX, and that in the India VIX is now trading at levels of around 18.5, and that is levels last seen in October of 2022. The VIX was up for the 12th day on Friday, so we'll keep an eye out for that as well. The Nifty Bank has seen no recovery whatsoever. It continues to trade at lower levels. If you pull up a 1-week chart, you would see on April 30th we made that record high of 49,975, and since then we are down almost 2,500 points from those levels in just a few trading sessions. Some earnings reactions this morning will come in from Tata Motors, Eicher Motors, Bank of India, Bank of JK Cement as well. Upasana will talk more about them. And the handover from Wall Street has been okayish, but that has been the case for most of last week as well, something that our own markets have not capitalized on. So we'll keep an eye out for that. And the Gift Nifty, as we just highlighted, is indicating a slightly negative start for our own market. So these are the cues that you need to watch out for this morning. And over to Upasana now, who would list out the stocks that you need to watch out for. Upasana, good morning. What do you have for us?
Well, good morning. Well, it was a result-heavy weekend, must say. First up is Tata Motors. The company's reported a mixed set of numbers, margin at 14.2% versus 12.1% on YoY basis. The company has given a cautious commentary at the conference call and a muted outlook. Next up is Eicher Motors. Strong operational performance, revenue up 9.4%. EBITDA margin stood at 27.6% versus 24.5% on a YoY basis. Next up is JK Cement. Weak results reported by the company. Revenue up 12% on a YoY basis, and blended realizations were down about 4.3% sequentially. Next up is ABB. Strong numbers reported by the company in its Q1 CY24. Revenue up almost about 28% on YoY basis, and margins stood at 18.3% versus 11.8% on a YoY basis. So we can see a sharp margin expansion in this one. Next up is Thermax. The company has reported a strong Q4. Revenue up 20%. Margins stood at 9.9% versus 8.7% on a YoY basis. Next up is APL Apollo. The company has reported a weak set of numbers. Revenue up 7.6% on YoY basis, while the volumes are up by single digit, that is 4% on YoY basis and 12% sequentially. BEML, good set of numbers reported by the company. Revenue up 9%. Margins stood at 24.5% versus 20.7% on a YoY basis. And Piramal Pharma, revenue up 18% on a YoY basis. And lastly, Aarti Industries, weak result reported by the company, PAT down almost 11.4% on YoY basis, and revenue up single digit, that is 7% on YoY basis. So these are the stocks I will be looking out for today.
Upasana, thanks a lot for that. And lastly, Mangalam is now joining in with cues from the F&O space. Mangalam, good morning. Somehow managed to sustain above 22,000, but how's the setup looking like?
Somehow managed, it was miraculous as we did that, because between Monday to Thursday, we saw a big amount of drubbing, and thereafter Friday was a little bit of consolidation. What's interesting is that, even as the Nifty is above 22,000, the Nifty Bank is underperforming. The mid-caps are doing well. That may give some relief to portfolios. The VIX, that's up 85% in just 12 trading sessions. So that's something that we need to keep an eye out on as we progress through multiple phases of the election, one of which is today itself. The Nifty managed to hold on to the 100-day moving average over the last couple of trading sessions. And now the Gift Nifty is indicating that the start would be exactly out there, 21,993. Will it be second time lucky, or will we see a decline below that, is something that we'll have to watch out for in today's trading session. Relentless selling from FIIs continues in both cash markets as well as index futures. So, the cash market selling was close to around 2,100 crore by the FIIs. In index futures, because of the consolidation on Friday, we saw almost an equal number of longs and shorts being added in index futures. So 20,000 long contracts being added and 22,000 short contracts being added by the FIIs. And by virtue of the shorts being large already, we have, the net shorts at around 1,59,000 contracts. At some point, this is going to give, but when that point comes, who's to say? 22,000 call, that's extremely active in trade, 188 rupees premium, telling you that 22,200 will be a bit of a resistance. At the same time, we'll have the 22,100 call equally active as well. 22,200 to 2250 will be resistance. And at the lower levels, closer to around 21,950 is the support. That's because of the action at the 22,100 put. The Nifty on the way up, 50 and 20-day moving averages will be important to watch out for. Just a few stocks that I'm watching out for. Hindustan Copper has entered F&O ban. And on Friday, ABFRL and PEL, Piramal, is exited F&O ban. So those are stocks that I'll be watching out for.
Interesting levels and stocks to watch out for as well. Mangalam, thanks a lot for that. Time for